We'll start with a China focus. Clearly, the PBOC stepping in here with increasing force to try to support the currency at the same time as cutting interest rates. The PBOC has done that. And so maybe they're sort of moving in both directions on that front. What do you make of the latest pushback that we're seeing from the PBOC over the currency?
Yeah, it's been very aggressive. It's been building aggressiveness all month. We have to remember that in this world of dollar appreciation, the yuan has been one of the strongest currencies in the world over the past month. And that is normally the case in a dollar appreciation cycle because the yuan is managed against it. But it has required exceptional efforts from the PBOC to have that yuan strength against other currencies. They're basically holding the line against the dollar, and they've had to put a massive effort in. We've seen bigger and bigger fixes. We've now seen a record fix today. We've heard that they've asked state banks to increase their dollar yuan selling. Really, up until the last kind of 24 hours, it has been about holding the line or slowing that pace of dollar yuan rise. But actually now they seem to have slightly turned it around in the short term. Dollar yuan going a little bit lower since yesterday. I'm not sure this is a big turning point just yet. I think they need some other dynamics around it. And as you kind of pointed out there, Anna, there's a bit of a contrast here because they're easing policy on one side, and arguably the economy needs a weaker yuan, or maybe it's not even debatable. They definitely need a weaker yuan, but they're just worried about causing panic and deflating animal spirits further, which is why they want to control that depreciation.
OK, so to controlling the depreciation, the target there, perhaps. One of the other big themes of the week, and continues to be so, is the yield story, Mark. But we actually see Treasury yields a little bit lower today. I know our colleague Garfield Reynolds has been writing about how his view that yields have further to climb. Bank of America, a well-read story on the Bloomberg terminal today, talking about a 5% rates world. Definitely getting a sense that there's the cyclical story here. There's the structural story as well. A lot of people talking about whether we end up in a higher yield environment.
Yeah, look, you know my bias here, Anna. I've been long in the camp that structurally yields do still need to go higher. And as I've always said, I don't think we're at the peak of this cycle yet. But I will say that short term, we've been seeing yields go higher for the last couple of weeks. And as we get close to Jackson Hole, I feel like we've priced in a lot of the hawkishness there. And, you know, we were discussing earlier before the show, Anna, you and I, about the fact that I think now the risk reward is more for Jerome if he has any shock in the market next week. Might be a slight dovish surprise because we're prepared for such hawkishness. I'm not expecting him to have a big impact on the market, and I'm not expecting him to be an explicitly dovish message. It's just that we've priced him in, kind of maintaining the hawkish line. So I think that overall, structurally, yields have much higher to go. I think in the short term, that dynamic may be running out of room, which is why I still think that stocks can get a bit of a bounce into end of August. But you know what? I've been saying that for the past week. We're really not seeing much joy out there. And I have to say, the price action remains super negative. Every single morning we come on this show, we've had a bad US session. We have a bad start in Asia. We try to pick up into the European day. European traders are the most optimistic at the moment. And we go through the US session, and it seems to finish so badly every single day in the US.